and welcome to the recap and lesson. Let's try this again. I just recorded it without sharing my screen. So we're going to do this one again. So let's get right into it. We are going to be discussing how to spot institutional traps or what institutions are doing and why they do certain things. Today's a great example of that. Just let me fix the camera here. So let's get into the trade. So first trade that we took here was on SPY. What we actually wanted here on SPY was we wanted it to open up below the previous close and take a push up into it. Now it didn't do that. It actually opened just below, took a very quick pop and washed. So a lot of members waited for the secondary run up into that level to retest. That's where we executed. I executed this first pop because I'm risking off of a level that's just above. So I'm simply entering and then risking. It's more of a professional type of methodology and way to get involved with these trades, but it's fine. It ended up giving a secondary entry or a proper entry for, more traders in that beginning and novice type of area. But regardless, real nice. Came down, wanted to confirm a little bit and hold, but overall just worked this trade, locking in $3,215. I did not stick around for the big run all the way down. Keep in mind, each and every one of these levels is placed prior to the market open. They're not placed after the fact, as part of our trade plans. And the one thing that I started to notice here on Q's chart, and I'll get into that because that's where kind of the magic really happened today. And a lot of members or a lot of traders would want to take that 5 EMA long. And I said, don't do that. What they're going to do is make it look like it's going to hold. And this right here would have been about that 5 EMA. And that's what they did. I said, they'll drive it into the 5 EMA, they'll bounce it, they'll pull it back, make it look like it's going to hold, and then wash it out. And that's exactly what they did. And I said they would drive it down into this gap fill. And that's the area to go long. And it literally came right into that gap fill. So, with that said, how do I know that? How do I know that they're going to do what they're doing? Well, I'm going to explain something to you guys. So let me move this away and get zoomed in a little bit here on Qs. Because what I started to notice was on Qs, and I'm going to go to Qs is entries. So the very first entry that could have been taken was the pop into the previous close. Now, I didn't want that because I wanted to see something develop on the chart first. And I'm not going to get into that. That's beside the point. Okay. But when it came down and it held this, so there's a level here that it held and a level here that it held. So what level is it? Well, my trend that I have placed is from the high here to the high here, peaks, confirmed peaks. Here's where traders, retail traders, make a big mistake. So because they think that this is formed, this area in here, and it's not yet, instead of placing their trend here where I snapped it, they place it over here. Okay. And right in there is perfectly the bottom tick of Qs. So underskilled, undereducated day traders are going to execute this trade, and they're going to think because it gapped up over their bullshit trend that it is going to go higher, because that's a major showing of strength. When we gap over a main trend, it's a big deal, folks. You want to take that long. But that's the thing. This isn't the right trend. It's an improperly placed trend, and it's going to create issue. So that's what I noticed in here. So it holds and it holds. So I'm looking to go short. So when it holds and pops back up into this level that I'm watching, I'm going to execute the short. As soon as it pulled back a little bit, now I'm feeling it out because I don't know if I'm 100% correct. I think I see something going on the charts at this point. And that's how a professional acts. You don't right away just go balls to the walls and go all in on something. If you do that, that's a recipe for disaster in the market. You got to feel it out. because the market's going to give you little clues. Okay. So sure enough, I pay myself, lock in a little bit, and then I start averaging in. So I average in a little bit here. Okay. And then it wants to push higher. And when it pushes higher, SPY is still below both of these trends. So even if it wants to squeeze out a little bit, it's okay. And Qs will not completely go ballistic until SPY gets over top of the previous close. It won't do it. Okay. Because again, it's below previous close, below this trend, and below another trend. It's weak. The market's weak right now. Well, weak from a day trading perspective, unless we gap up over those trends. But retail traders watching Qs, not watching SPY, trading alongside both markets, typical professional shit, and looking at an improperly placed trend, they're going long. So now let me take you just, and we'll make this real quick. I don't want to take up too much of your guys' time. People will okay, well, we'll start with the smart money, the institutions will recognize that, and they'll recognize, okay, why is this getting bought up, right? So it's getting bought up because retail is buying a bullshit trend. That's what's going on. And they're like, we got them. You got to remember, institutions, the smart money, they day trade very differently than us. They day trade trapping retail traders. That's all it is. They don't trade setups. They don't day trade other shit like that. They don't day trade like us. They day trade traps. They look for ways to trap us. Remember, they're playing chess. A lot of you motherfuckers are playing checkers out there. So that's why you miss stuff like this, or you're simply just not educated enough. You've never taken the time to get educated, or you're still working on become educated. So you're missing stuff like this. So as it goes on, I want to point out again, not to be repetitive, but again, it bears repeating. Comes down, it holds that bullshit trend, confirms that bullshit trend. Then it puts in a higher low above that bullshit trend. It's showing strength. And then it pops through and it pulls back, remounting now a level. It's looking real strong. So you're going to have a lot of retail traders buying this. And then right here, they're about to buy that breakout as well, because it's pushing up. This candle opens. It looks like at that time that it's about to squeeze. You know how most fucking traders out there say, like, oh, it looks like it's going to do this, or it looks like it's going to do that, or I think it's going to do this, and I think it's going to do that. Smart money's all over that shit. They know what you're thinking. So when that happens, this is where it starts, the tables start to turn. Okay. But then it holds the opening price. And that's usually, if you even have a little bit of knowledge, you know that that opening price is a big deal. So you're going to add in on that if you're working the long. And that's what they do. They add in, and then it washes, and then it holds again, but you're missing a very subtle lower lows, and that bid is starting to drop out. Now you have to remember, I know this all sounds hindsight. It isn't. All of this stuff is said prior to it happening. I'm walking through my members through this, plus I'm putting in my money where my mouth is on this trade, where it looks like it should go long. You should be going long, but it's not. It's a short. And the reason why it's a short is because the true trend lies in here, and we are below that trend. It is weak. We are below trend and previous close on SPY, and we are below trend and previous close on Qs. There is no showing of strength. But because of an improperly placed trend line, and a lot of retail traders will draw their trend lines like that, that's when smart money institutions attack. They smell blood in the water. And then sure enough, that's when this happens, and it completely washes out. And right before, so right in this area here, right around 10:15, I told the members that you were about to see some speed. This is where they're about to knock it down. They made it look like it was holding again. And there's even more that I explained that I'm obviously kind of brushing over. because it's kind of difficult to explain this stuff after the fact because it looks like it's hindsight and it kind of looks real like bullshit. That's why I don't like doing videos like this where I'm explaining all the ins and outs of the shit that I said on, especially when it's like this much information, because number one, a lot of people, it's going to go over their heads. And number two, it looks like bullshit. But what you're missing is this is all done live on screen share in front of hundreds of traders. So they can all vouch for it. So anyways, I said it's about to wash out. We're going to have some speed. Sure enough, start paying myself into that speed and I lock in. So on SPY, I locked in $3,215. And on Qs on this trade, I locked in $5,935. All with confidence, all with ease, all with absolutely no fucking stress. This is what we do at Trick Trades, folks. If you want to learn how to trade professionally and consistently and actually understand what's going on these charts before it happens, it's like your own literal crystal ball. Come to tricktrades.com. Adios, folks.